Happy Friday, everybody. Good morning. Good morning. Finally, an on-time start. 11 a.m. here in the Baltics, Ukraine. 10 a.m. Germany, France. 9 a.m. UK. I hope everybody's been enjoying this little pump. Let's go ahead and see how it looks in the old main model. Let's take this off. All right. So yesterday and today at this moment above the power curve. And on Wednesday. Zoom in. Right on trend. Nothing but fair value. Nothing but fair value for Bitcoin. And if you look at this rainbow, in my view, it's hard to unsee this. All makes sense. And we're clearly moving up from the 2022, 2023 dark days. Now let's look in terms of gold. Some questions yesterday, which were very good as far as gold. Hello, Kevin. Hello, Mark. Thank you. I've put a lot into this chart now as far as data. It's kind of weird, but I just wanted to look at this another way. So we can draw these same percentile bands, this rainbow, with gold, as we did with the dollar. But when we go out into the future, that's kind of hard to understand. And I understand that myself, right? So because most people think in terms of gold, in terms of its dollar price, as they do with Bitcoin. So what I'm showing is the historical data of Bitcoin priced in gold. And then I'm also switching it to a USD value in the future on the same gold power trend if we keep the price of gold at $4,000 an ounce. That's, you can argue a big assumption, but Bitcoin stayed relatively flat at $1,000 to $1,500 for. Did I just say Bitcoin? Gold stayed relatively flat at $1,000 to $1,500 for the entire life of Bitcoin. I know gold's on a massive run, but just to give us a flavor of what Bitcoin does in terms of gold ounces, I think it actually would be more helpful. So, and of course, I have the actual Bitcoin price in dollars too here in black. All right, so there's a lot on this chart. So just to anchor ourselves in what's happening here, right? The green is Bitcoin's price in gold ounces. The black line is Bitcoin's price in dollars. And you see we got to 2017, $1,200 was the number. It was this week where we went 1-to-1. Sorry. Right there. Okay, so 1 Bitcoin equals 1 ounce of gold here, $1,200. Bitcoin, of course, doesn't look back. Gold stays stagnant. Now, getting above the 9, the 90th percentile, was harder in dollar terms, right? In dollar terms here. Just sort of barely got above the 9 was 40 grand, 41 grand, 42 grand, and Bitcoin got up to 60 grand. But on log scale, it looks much harder compared to the prior cycles, right? Prior cycles, we peaked well over the 9. if we run this in terms of gold, it's even harder, right? We barely got above it in 2021. So I'm looking at where I have the cursor here. The 9 is 29 ounces of gold per Bitcoin. Bitcoin actually did 35 ounces of gold, 34, so just barely above it. So question could be, in this cycle, will we get to the 9? Estimating not in terms of dollars alone, but gold ounces. Of course, I'm triangulating from the gold price in dollars, but it's roughly going to be that value in world markets. And I think it makes sense to say that, you know, this curve might be a little bit steep, and it might keep coming down more and more. And yet, I still think we're way below trend where we need to be. Okay, so before going out into the future, let's just look again, right? The trend is 60 ounces of gold. We are at 35 ounces of gold for Bitcoin. 30, even right now, 30. Because gold is screaming. $3,800 per ounce right now. So you see the green shaded area, that's Bitcoin in gold ounces. Still way more than an ounce. If you listen to Peter Schiff, as usual, you'd be quite angry. 8 years ago, it was only 1 ounce of gold per Bitcoin. Now it takes 30 ounces. But as you can see where we are in the rainbow, we're low. We're quite a bit lower than the dollar chart, where we're literally right on fair value, right? We're right on the trend line. So a good question arose. I can't remember who asked it yesterday, but let's project now out the gold bands based on a $4,000 gold price. It's kind of a simple idea, just based on 4,000, but let's just project it out. Okay, so we switch over now to pricing it in dollars. Now you're looking at dollars in the tooltip. But the rainbow is based on a $4,000 gold price and where Bitcoin typically is. Okay, so let's assume, so what we see here is more optimistic numbers, which frankly I actually think is interesting, because though gold is having its day in the sun right now, and everybody's worried about inflation around the world and global conflict and war and China continuing to buy gold, Russia doesn't have any gold, you know, swapping it out with China oil. Russia can't even provide gasoline for their citizens, rightly so, for their war, terrorist war in Ukraine. There's a lot going on with the gold price. But assuming that Bitcoin can at least get back to the trend line of gold ounces to Bitcoin, we get a much more optimistic price, assuming $4,000 gold. All right, and that's only $2,000 more optimistic than now. I'm keeping it flat at 4,000 all the way across, but just understand, here we're growing on ounces per Bitcoin. Now we're looking at dollars per Bitcoin, but based on the gold ratio of where we think gold will be. So I know it's a little bit wonky, but I wanted to just show this in one chart because, you know, this puts us at a more optimistic price. All right, so look, notice obviously the Bitcoin price at 120K right there in dollars is actually 31 ounces of gold, but on trend, we should be at 62, right? We should be at 62 ounces. So I'm just taking us to there right now. I'm just sort of magically teleporting us there. It's too hot right now, but thinking if we go back, if we boom in Bitcoin terms, look, the most aggressive thing to say is we'll get to the 9, right? We'll get to the 9 again. I think it's maybe too aggressive, but if we get to the 9 here and we go out to the end of the year, look at that price per Bitcoin, 500,000. So that's very interesting. What it's showing is if we sort of anchor ourselves in the historical performance against gold, we could go back to that level. Whereas here, if we get to the 9 in just pure dollar terms by the end of the year, we're only at 250. So basically, it doubles our optimism. It doubles our optimism to think that Bitcoin could get back to its historical performance against gold, even considering these elevated gold price levels in dollar terms. I know that's a mouthful, but that was a good question that I got yesterday, and I thought it's good to at least just show it as an option so we can sort of see where we could get to. Let's take off the band so you can see again. We are way low. All right, we're way low in terms of gold. Bitcoin's price in gold. Literally a 50% discount based on the trend. So I think that's really interesting and certainly not impossible. Again, I mean, if Bitcoin just sort of gets a second wind here in the fall, gets back to historical levels that it has always been in terms of gold ounces, right? And the trend line growth, which is a power curve, which is a 95% R squared, it's not impossible to get back to that level. Of course, I hasten to say I temper my expectations of that because, firstly, we have the dollar chart itself, with the 90th percentile gives us a much lower level. And then just considering that gold is literally so booming right now, like literally we have to double our value to get back to these, right? So just to remind you, at $4,000 gold right now, that's about 31 ounces of gold per one Bitcoin. If we just magically go back to the trend line, we should be double in Bitcoin price, right? If we magically get back to the Bitcoin priced in gold trend line. So the 9 might not be possible, maybe the 8, maybe the 7. And if we go out to the end of the year, you get much more optimistic numbers for where Bitcoin could go. Presuming gold stays at $4,000 an ounce, presuming Bitcoin goes back to its typical trend line versus gold during a boom phase. So I'm happy to keep revisiting this one as well. I think it does the job. I think it does the job in explaining the percentiles. You know, like the dollar chart, a lot of weakness here. It's really hard to get above the 9. Okay, so maybe we don't get above the 9 this time. Maybe we only get to the 8. If we only get to the 8, right, that's still a much more optimistic picture than Bitcoin's price in dollars. So it's just another tool in the toolkit. Zoom in here. Also notice that the trend line on the gold chart Bitcoin priced in gold is between the 7 and the 8. And on the dollar chart, it's between the 6 and the 7. Right? So just trying to hone this in, refine this down to show you and indeed, as you can see, so look at the evolution of this. I'm looking at the rainbow now, the evolution of the rainbow. Okay, so it's hot in early years, no one really knows, but as we set this base, if you can tell, actually we need the trend line on. Look at relative to the black line, the rainbow sort of sinks and sinks and sinks, and especially with the performance against gold in the last 3 years, this 7 and 8, they keep sinking. 7 was even above the all-time trend here, and then it sinks to where it is today. To me, these are super bullish charts, if you're wondering the brass tacks, because I expect a correction. We have corrected already to the downside. Again, the only assumption you need to make to go along with me on this bullish sentiment is that you believe in the power curve. You believe in the idea that Bitcoin moves in power, not in exponential, both on the Bitcoin chart in gold and the Bitcoin chart in dollars. As long as you think this power curve has legs to reflect, the adoption of Bitcoin, to reflect the idea of how Bitcoin continues across the world, then I think it's a pretty good anchor of where we could go in the short midterm. And again, just to be clear, since we've literally had now over 3 years of sub-trend line performance of Bitcoin in terms of gold ounces, again, doesn't mean it has to correct back or overcorrect back, but based on past performance, that seems likely. With a possibility, this chart shows us it's even possible that the correction could be even wilder than the dollar chart. And the other thing you kind of have to believe, if you want to go along with me here, is 90, as I define it, 90% of what you see here, all the price action in dollar terms and gold terms, it really has not a lot to do with the Federal Reserve, the money supply, the gold price. It has everything to do with the adoption of Bitcoin, because networks grow in power. And since Bitcoin is exhibiting a power curve and Bitcoin is a network, thus Bitcoin will continue to grow this way. Although, I admit this seems like a hard thing to bounce back from, right? Gold is at an all-time high. Gold is having its time in the sun. Peter Schiff finally is getting a little bit of relief from all his nonsense. So anyway, we'll keep tracking this. This is all historical, actual, and then this comes out to putting it back in dollar terms, still assuming the gold trend lines, but also $4,000 gold price as we go out in the future. Of course, I could have assumed a $4,000 price plus a 2% growth rate or 3% growth rate, but I just wanted to keep it real simple. For the short term, since gold is already This is already above the gold price now. It's 3,800 or something last I checked. All right. Let's check in on transactions. The daily transaction values, throughput, right? How much has been sent through the Bitcoin network in dollar terms a day? Record here, 400 billion in September 2021. Now, just a cool 34 billion. Climbing along. That's it. Nothing looks crazy. But obviously, during boom times, this rises. And actually, if any indicator, it could even top after the actual price top. This is daily. And the 30-day smooths it out, but even still, you know, you sort of get to the highest levels, look, as the price is coming down. Price is coming down, and we're at the highest level here. So it's not exactly a topping indicator, but it's something to keep in mind. All right, so we have boomed on the 30-day a little bit here during the halving, but more or less, you know, it just seems like stable growth. Okay, I want to go back to this one. This is a long, whoops. Got to refresh that. Sorry, clicking on the network values for a second here as this refreshes. Notice, by the way, that for sure, let me take off the daily. Just very simply, you know, you do get this to top. If we have a real top, then this is sort of a blow off. Might not be a perfect blow off. Here it's very delayed, this weird double top. But, you know, $1 trillion over 30 days back in 2018. Then 2.5, 3 trillion in 2021 into 2022. We're not even close to that on the 30-day value throughput through the Bitcoin network. So to me, this is not showing, this is just showing, good evening, Tim, my low time preference friend. Just showing stable growth and not showing anything that looks like a sort of a blow off euphoria transaction data on the network. All right, going back to here, putting this on log. All right. It's trailing 12-month returns in green. All right. When you're below the axis, you're in negative territory. Sad times for everybody. And when you're above the axis, we're all feeling good. All right, so on a curve, notice how, look at the TTM percent on price, trailing 12-month percent change on price. It can be hundreds of thousands of percent here back in the days for the lucky ones. I don't want to say lucky, for the people that took the risk, because I was here and I was more foolish than lucky. But if you take that noise off and you put it on a curve, you get this, right? Which of course is just, now I'm taking the trailing 12-month of the curve itself. Thousands. Instead of hundreds of thousands on a curve, it's thousands of percent. %42.8% right now. By the end of the year, it will be exactly 42%. Still an enormous return. Nothing to worry about on a curve. And then people say, oh, Bitcoin's not exciting. You can't make money or whatever. Still look at the trailing 12-month actually. All right. Like from the summer, you were getting 80% year on year. January 2025, you were 134% year on year versus 2024 start price. Now, you guys tell me if you're bullish, bearish. All of these charts that I just showed, I think, are pretty bullish. I don't know if you saw this one, Tim, but this is Bitcoin priced in gold, then taking the gold projections out, assuming a $4,000 price. So we put it back in dollar terms because that's easier for some people, to, myself included, to understand. And if you assume a $4,000 gold price by the end of the year, you're getting richer valuations than the dollar chart. Frankly, doubly richer. Might be too aggressive, but it's exciting to look at. All right, another one. Let's look at the major assets. Haven't looked at this in a while. Let's even take off Bitcoin here. Just look at the United States debt markets. Okay. This is here. I think this is actually a couple days before September end. I didn't update it, but you get the idea. It's 37 and change trillion. We're in government shutdown now in the United States. But no matter what they say, all the politicking, that's a 98% R squared exponential trend. I mean, you can't even tell where the actual data stops and the projections start. This is supposed to be the world's safe haven asset. This is where all the pension funds put most of their wealth, or let's say their most valuable core client funds. This is supposed to be the risk-free asset. Almost quadrupled in 17 years. 7.5% per year. George Bush, with all his calamity, handed it off to Obama with a $10 trillion budget. Not budget, but debt level. And now Trump has us at a 37 and change trillion. Just more reasons why a lot of the noise doesn't bother me. Those soft days in Bitcoin last weekend didn't bother me in price. I hope you guys as well. They're just going to keep printing and borrowing. And if there's a panic, the solution is usually clear what happens. So put Bitcoin on that as a comparison. Again, you got the power curve versus an exponential curve. Exponential curve is straight line. Power curve is this nice concave. Here's our estimation. Early 2040s, I think Bitcoin is at the value of these major assets. Lo and behold, it happens to be around 100 trillion. Gold faster. Although to be fair, gold is ripping, and I discount it immediately about 50%, not quite, because that's what the trend line shows. It's just gold is ripping way above the trend that it's been on since Bitcoin started. And these trend lines are only just, you have to pick a date. I'm starting from the nadir of the global financial crisis, which was actually here, March 2009. So I'm starting December 2008 for all these trends. So gold could be a little bit longer, right? But it's not going to, I just do not see it. I just do not see it at all going to some permanently high plateau. As we know, Bitcoin's characteristics as money are much better. Anybody got any questions? Yep. I agree. Agree with you, Tim. At this point, I mean, it's just pomp and circumstance. Like there's no reason for any of this. To change. Small little lecture point here. Ray Dalio says on this podcast, money needs to be both a medium of exchange and a storehold of wealth, and the latter is more important. Says he doubts that it will take on reserve currency. That's because all transactions are public, so no privacy to it. We can talk about the public-private stuff, but this is actually crucial point. I know Dalio is a smart guy, a lot of history behind his books, but that is an incorrect statement. Just to read this, what makes money money is not the store of value function or the unit of account function. It is the generally accepted medium of exchange function or characteristics. If you don't have that, then it is not money. It's a pure definition of money. We had George Selgin talk about that a lot on a early show that we did. The other two characteristics are true. You have them with money. They're just not as interesting to study as the generally accepted medium of exchange function. And of course, you have the state. The state causes confusion with monopoly licenses. And as I argued a lot, with the Polish gold race, gold has basically been captured, centralized since the end of the World War II in the U.S. So just have to see how that goes. But Bitcoin is far from being captured, and I would argue very important that it does not get captured. Yeah, I think this is a fine comment, just saw here. Fiat money is a store of value, but it's a poor store of value. Fiat money is also monopolized. A currency is a monopolized money. So that's what I was just trying to talk to here. It confuses the picture, but we have to trudge through. But he's wrong to say that store of value is the more important function. It's just not true. It's not what makes money money. And we got a long way to go. I've shown this before. So if we have the trailing 30 days of transaction values, now we smooth it out even more to trailing 12 months. All right, throughput through the Bitcoin network. We're only right now at 8.3 trillion, trailing 12 months, which is 10 trillion below the record and 145 times smaller than what the Fed does, which is 1.1 quadrillion dollars a year. So the dollar's network effect is huge. It is a monopoly. It is a big competitor. But Bitcoin continues to go straight at it. Also, as we know, there's even more positive sort of slope, right? With the big boom in price since the start of the ETFs, this trailing 12 month is a linear chart, so it's on a much higher growth rate than, say, here, where it went flat. Obviously, when it goes down in the bears, but if you just look at this, we're slowly going. Actually, interesting. Here's kind of, didn't quite catch that before. So before the 2018, can I catch those both on linear? That's right here. Who knows, guys? Maybe we have a 2017 type top. Look at the way, of course it's different. Every time's different, but a nice slow increase in the trailing 12-month transaction throughput here. Actually, the first time we got over $1 trillion, trailing 12 months. July. 6 months later, we topped. That slope, what I'm saying is this slope looks similar to that slope, if not shorter. Of course, this was coming off of a big bear. Anybody think we're having a 2017 type top? Pure, clean, just blow off fun. We might. I can't figure out the bearishness. Gold is on such a volatile trend. I could pick like the current price and extend out on the same slope. Maybe just draw a dotted line. So we could see it a little bit. It would pass Bitcoin a little bit later, like probably somewhere. I mean, Bitcoin would pass it like here maybe. If it stays at $4,000 per ounce. But whatever. It is what it is. These are the numbers. I just checked this morning. The Federal Reserve has not released their physical currency value outstanding for September. Just so you know, Bitcoin's market cap right now is 2.39 trillion, and August's physical currency stock in dollars is 2.44, I think it was. 2.4 something. So Bitcoin is literally right on it. Might not happen this month, but on a monthly close. What was Bitcoin's market cap on September 30th? It was actually over the weekend, wasn't it? So it's not that high. Yeah, it's going to be too low for monthly close. It's 2.3 trillion before the pump. The dollar, physical dollars minted and printed, dollars and notes and coins, something like 2.4 trillion. So Bitcoin, that's the last money supply that, like cash money supply, that Bitcoin has not passed. So that'll be just another milestone. Just another milestone for Bitcoin. I'm going to show you gold again in dollar terms. So here's another reason why I just don't think we can go much higher. I don't even have the percentiles here, but if you look at it on a log scale, you look at the all-time trend. Yes, gold is at an all-time high, but it's very close to being at an all-time high, which would be, at these levels. Doesn't mean it couldn't double from here on log scale, but we're getting very, very rich for what gold has represented historically. This green line tells you if you bought gold at any given time, held it till today, this would be your CAGR. So those that had the fortitude to buy gold at $650 an ounce in 1980, I know it went up to $850 in January, but on the month end, if you bought it for $650, held it till today, you would have a 4% CAGR. Congrats. That's all you could do back then. I would have been a gold bug back then. I was a gold bug right here. Just by chance. Didn't know anything about it. Just saw the performance. I started my investment career, let's say, right about here. So I was just lucky. Gordon Brown decided to sell most of the UK's gold right here. Good lad. Again, the doubling rate is the inverse of the CAGR. So what's the CAGR? It's the black line. Sorry, this one, the percent. 5.2% on a trend line. That's what gold has done. Some people, when they run a quick analysis of gold's performance since 1971, they'd pick 35 bucks an ounce. That's going to give you a very inflated percentage because it means you bought all your gold here and then sold here. You'll be up to maybe 7-8%. The better way is to measure this. What's the slope of this? Right. Sometimes you're above, sometimes you're below, but the slope is, just to take all the noise off here, the slope is this percentage, 5.2%. Then you can do doubling time, 14 years. That's the math of gold in the modern world. Bitcoin, as we know, is a little bit weird, grows in power. So it's had a much higher growth as it's been starting to be adopted, and then have a lower and lower growth. And we can go all the way out till 2070 to see it, that it takes that long to get to 10%. But then we'll continue to get lower. So the philosophical questions start to come here. I've gone into them many times. I'm not going to talk about whether we move to a power curve in the economy or Bitcoin moves to an exponential curve. Hard to know. But this is at least what Bitcoin does. It's a little bit different. Sustainable. Sustainable growth. And by the way, when we get to all the, I think, the fun times, which will be like late 2030s, let's just say 2040, Bitcoin still is projected to run at a 20% CAGR. All right, from a 42% right now. But this is all the more reason that I'm sure something will break here or happen. I don't think it's going to be an automatic, like, next day decree from the government, we're pegging the dollar to Bitcoin or whatever, but there's many things to say about this, right? So if Bitcoin is the asset that we think it can be to hedge inflation, then you would expect it to mirror inflation. But the power curve doesn't have anything to do with that. The power curve just is what it is. It decreases in growth rate. It's not like gold, which has a fixed growth rate. Of course, it's a volatile asset. It can be above the growth rate, below it. Right? It can be above the trend line, below the trend line. I got to change the color of this. This is the right axis. It can be above the trend line, below the trend line, above the trend line, but it is the trend line, is what it is, 5% per year. It's a long-term trend. Bitcoin, of course, very different. But my point is, if Bitcoin is the asset that we know it can be, and if inflation, which it will, according to Jeffrey West, keep running hotter and hotter, economic growth must be faster and faster to keep up with it. Inventions, tech, AI, whatever. Well, then at some point, probably even before 2040, you're going to have the stock market returning 20% per year. It does not do that right now, but at some point. And then Bitcoin's going to fall below that number. So one of two things will have to happen. Either Bitcoin goes to exponential, probably becomes more centralized, fiat currencies stay, we all just continue on exponential growth, or Bitcoin pulls the world into what it does. It's my interpretation. Let's change the ISO really quick. Better. Got to get into a proper studio. But anyway, that philosophical stuff, I think we got a little bit of time. In fact, I know we have time. The other reason I know we have time is because Bitcoin is still so small compared to the dollar market. But one thing I haven't shown in a while is Fedwire in terms of payment. So let me show you that. So again, here we go. There's your 8 trillion trailing 12-month throughput. $1.1 quadrillion for the Fed. And then here, we can actually see Bitcoin can already do better than the Fed. So let's take this off. Take this off. So this is by number now, not by value, but by number. Fed does 200 million transactions a year. That's a TPS of 7. And as you probably know, Bitcoin can do more and does do more. 327 million transactions per year, throughput of 5.2. Is that right? This is payment volume. Sorry, I'm mixing. This is transactions. So actual transactions, which it's the base level. But inside each transaction, as you know, you can batch. So exchanges do this every 10 minutes. It's best practice for on-chain players, right? So when exchanges process withdrawals every 10 minutes, they don't just do one transaction for every person. They're batching hundreds for every user that requests a Bitcoin withdrawal. So those are payments. So just to not confuse, let me take off the TPS. Let's put the payment volume now, which is still a base layer thing, but it's a little bit, it's a little bit more helpful to Bitcoin, let's say. So it can do 327 million. And the TPS of that is 10.4. So I'd argue this is actually even a better way, because it's still a base layer transaction level type stuff. It's just, inside each block, inside each transaction, you can have multiple payments per one transaction. So helps the numbers a little bit for Bitcoin. If you just look at the transaction level, it's slightly lower than Fedwire. And interestingly, falling, right, from the halving. Here's the halving hype. But as I've said many times, Bitcoin doesn't need to do anything more than increase its dollar value, increase its adoption to keep giving you these numbers. There's no technical change that's needed, no taproot change, no knots versus core change. This is just how it works right now. This is what the network has been doing. And it's actually, even from 2016 on a payment level past Fedwire, which is pretty cool. Again, on a value level, it's amazingly small. No one's using Bitcoin compared to Fedwire. But on a, economic capacity level, it can totally compete with Fedwire right now. 300,000 transactions a day, 400,000 transactions a day. It's totally enough. I probably should just do one slide for payments, one slide for transactions. Let's take off the payments. Wait, here. All right, here's the actual transactions. A little bit less than Fedwire at the moment, but Very close. .2 transactions per second. And then my other favorite one for the week, which gives me complete serenity that we're not in any sort of a crazy bubble or even really at risk of some sort of a dip, is we're just churning along as normal, and fees are completely normal. Right? So anytime there's a boom or during the halvings, right, or if ordinals take off, which was here, you get the share of fees versus new coins. Miner revenue makes up both of those things to be less. And so far, it's still 99% new coins going to the miners for revenue. Transaction fees are non-existent. So if this number was, say, looking like here, right here, and falling, I might be thinking, well, there's maybe some short-term action really going on here. 75% fees on this day. Talked about it a lot. I might think like this is sort of a topping number, right? Certainly if you go back to the prior tops, as this returned to normal, price went back down. Pretty good topping indicator, actually. We don't see that at all. So it doesn't, like, I don't see anything retreating from something abnormal. To be a boom, to be a blow off top, this will have to come down from 99%, is the point. I know we have treasury companies. I know we have ETFs. Retail spot is still an enormous volume of Bitcoin. So this will come down. And right now it's completely normal. I guess it might help if I do the inverse of this chart, right? Show the spikes like fees on the other side coming up from the ground, but I don't know. Kind of like it like this. Any other questions? Been lecturing. I want to do a little bit of politics. Go back to here. Posted this the other day. I'd be happy for the U.S. to end the Ukraine war, something important to us on our borders. But this strategy that Trump did obviously failed. He chose not to strengthen Ukraine. He chose to weaken Ukraine and give Russia everything they want, even though Russia never once said, we'll stop the war if you give us the Donbass. So here are all of Trump's promises, starting with day one, he'll end the war. Days passed since then. This is as of October 1st. And after all the talk about maybe he'll put sanctions on in 2 weeks, 12 days, 50 days, we're at the point where on September 23rd, he said maybe about a month from now, he will inform on Putin's trustworthiness, on if he thinks he can trust Putin. So for those of us following this war for a long time, and even since 2014, this is perfectly predictable. He actually said it 53 times during his campaign 920 days ago that he could end the war in 24 hours. In any event, Europe must step up and do it alone, and at least be of the mind that they can only do it without the U.S. You have to stop relying on the U.S. as some sort of a backstop. It's pretty clear that they're not going to be there. So that's my rant, my geopolitical rant for the day. Speaking of oil, and another problem, again, Republicans have plenty of room to criticize the Biden administration. You know, we have this Russian bingo, fascist bingo. It's estimated we're getting up to 46% now of oil refineries that Ukraine has taken out. Joe Biden stopped this. Joe Biden did not want them to do this, and it's showing to be the only thing that's slowing them down. That's not a defense of Trump's strategy at all. It's just saying there's so much room for a normal sort of liberal policy to talk about the failures of what a Democratic administration does. But as we know, the Republican Party is not really traditionally Republican anymore. I'm going to show you one more thing. I saw this recently. One second. Sorry for my silence. Here it is. The BBC. Twitter? On Twitter, of course. I can't find it. Here it is. Sorry for the downtime. So here's Ukrainian attacks on refineries 2024 and 2025, according to the BBC. This is Biden getting ready for his election before he stepped down because he couldn't talk, telling Ukraine to stop attacking Russia. After Trump comes in, they do it. Trump tells them to stop attacking Russia. And then Ukraine finally says, F this, attack Russia. And now we see lines in Moscow all around where hopefully maybe the people will rise up in solidarity for Ukraine and against a fascist dictator. But more likely they'll just line up against, not having gas. I don't necessarily agree. I mean, I'm a critic of, always was a critic of Iraq, Afghanistan war. That the U.S. did. Obviously, the U.S. went through this in Vietnam. But I think it's more of a failure of leadership than anything else. I mean, Ukraine attacked, at least in this war, in this case, Ukraine attacked no one. I understand how it seems that way, especially from the American side, and this is why Ukraine's not going to get any help from America. They have to do it themselves. They have their own weapons now. They have the flamingo, the most mild bird ever in the world, naming their new light cruise missile after. It's pretty funny, but pretty funny, I guess, if it wasn't so sad, everything. That's the only thing to stop. Putin has never said they're going to stop, and they've never said they're going to stop based on, any promises that or concessions that Trump tried to get from Ukraine. So, also, if you saw that Trump tweet a couple weeks ago during the UN, or last week, I guess it was, during the UN's summit in New York, after he said he believes that NATO should obviously shoot down Russian aircraft that are invading its airspace, which was a surprise to Zelensky and everybody else. He had that hilarious tweet where he said, after considering and after fully understanding the conflict between Russia and Ukraine, hilarious statement to make in itself. He said he thinks Ukraine can win, but of course at the very end he said, good luck to all. He's just washing his hands of it, which again, to me, was perfectly predictable. In that sense, he's doing what he said he was going to do. So, as much as I hate Trump's rhetoric, there are some things about what he has done which are more noble, maybe, to what you're saying, Daniel. Whether he really believes it or not, whether he really even thought about it as a campaign promise. I'm talking about now Afghanistan and Iraq. I think he generally doesn't want to engage the U.S. military into forever wars, to use your phrase. But It is a sad state of human affairs if you look at it globally like that. Yeah. Yeah. Terrible. I mean, Orban and Fico, the two main countries, Slovakia and Hungary and Slovakia, that are still buying oil. And then, like you said, if you look at the exports to like Tajikistan and Kazakhstan, you can see charts like that where they have just skyrocketed from many, many countries. There you go. So you can see the countries that actually care, right? The countries that figured it out. Of course, all of ours. We allowed these sort of spikes to happen during that first summer, but then, like, okay, you got to put these down. Poland, Lithuania, Sweden, Estonia, Finland, Latvia, France. Everybody else, even the Czechs, surprisingly, I'd say. Which country is this, by the way? I guess I should say. Is it? Yeah, this is Kyrgyzstan, the powerhouse of Kyrgyzstan. No offense to any Kyrgyz people watching, but the only reason these exports are rising, obviously, is to go to Russia. So I completely agree with you. Yeah. Obviously, that's the biggest fear for us, right? Lithuania, Latvia, Estonia. Is if we do get invaded, it's going to be a lot of tough talk, but at the end of the day, it's only hardware that can defend you, as Zelensky has recently said. So, but Ukraine is doing what they need to do now. Finally striking the refineries. Haven't done an update on donations and casualties and stuff, but super sad. I was speaking to a group recently, and I talked about how the value of holding Bitcoin, especially in a charity, and I spoke to Ukrainians as well back in 2022. Let's go here. Right, the price was coming down from the high in 2021. Bitcoin was at a high here in fall of 2021, and by here, Ukraine is invaded. So we're coming down, down, down. And even with that, all through here, I was telling charities and people in Ukraine, like, buy Bitcoin, hold it, save it. In any currency, you would be doing much better. Of course, you'd have to get through some pain here. It's difficult, especially when you're hand-to-mouth organization. But sort of the idea of the Bitcoin Treasury Company or Bitcoin Treasury Charity, I think, is going to be very huge for people, hopefully, to stop some of the shameful behavior. But we're a long way from that. Even though it's a bit dour, the things I've been saying, I do think the light will triumph over the darkness here and that Ukraine will be free. I mean, Zelensky himself has said Ukraine is undefeatable. So, whoops. Balaji hosting the Network State Conference live stream, 605,000. Thank you for tuning in to me. How's that going if anybody's watching? Massive. This is an interesting chart. I really like this charts that Michael distributes. Top 1% earners in Europe. 9.7K for Latvia. Norway 25K. UK 17.5K. Quite interesting. US, you need 66K per month. Per month. To be in the top 1%. I'm actually surprised it's this high in the Baltics, to be frank. Knowing the average salaries, I would think it'd be something like Serbia or Albania here. Interesting. Also on my feed, I've been at least seeing some good tweets about how Orban is really falling behind in the polls, assuming there'd be a free Hungary and free elections. Not really sure there will be, but people are finally fed up. And you can see how poor he has made Hungary with his autocracy. Twitter's search function is just shameful. I don't know what you guys think about it. Overusing that word, but this is the wrong circle, but the chart is true. You need to circle somewhere here. So of course everybody fell from the crisis, but I think he came in 2010. So stagnation happened here. Which is pretty remarkable. You know, when Romania and Bulgaria came to the EU in 2008, I believe they were the poorest in the EU per capita. And Hungary now is taking that mantle. Do you mean for that income chart? I don't know. Yeah, it's just a Europe chart. I'm Euro focused here. There's also I wonder about this. I don't even see the source here. Usually, I should you should put the source if it's Eurostat, but I know that Ireland has a way artificially inflated GDP because of all the tech companies are there with low tax. And this seems, again, to be artificially inflated. I mean, it might be accurate, but Ireland is objectively poorer than the UK, so it's kind of interesting. Yeah, I agree with you actually. Maybe I should flag it. Like I look at these, this is an insane salary here. If you net 10K per month, that's just like that seems like you'd be in the top 0.1% to me. Making 100 grand a year, 120 grand a year just seems it's like impossible. And it certainly doesn't seem to equate with someone making 66K per month in the US. So I agree. Anyway, usually I like the charts that Michael posts. Really good follow. But yes, maybe I'll do a chart on that at some point. So yeah, little Bitcoin, little geopolitics today. I'm totally, I guess one should never be too relaxed, but you don't change Bitcoin, Bitcoin changes you, right? Going back to the chart that I started the show with, this one, it's kind of a weird one, but now combining the gold ounces with the projected dollar value of Bitcoin at $4,000 an ounce, right? Gives us much more optimistic prices come December, assuming we get back to these levels. I think it's less likely that we do, but it's nonetheless, it's pretty bullish to look at this because Bitcoin has hit the 9 every single cycle. So, still not going to count this out until we pass it. Thank you, ETJ. Really appreciate that. It's good to hear. I know a lot of people. I don't know. I'm always trying to drill down. There's a lot of trolls on Twitter, but obviously the Russia-Ukraine stuff's really important to me personally. Unbelievable cost Ukrainians are paying, but they're not going to give up. It's really incredible. It's really their war of independence. Thank you. Thank you. So, anybody got anything else? Plenty of time. When this number goes down, it's a good trend going down, but we still got a long way to get to Fedwire numbers. And yet, Bitcoin, in terms of payments, can even do better than Fedwire. On average, there's about 2 more payments than every transaction on average. So multiple payments per one transaction. So this is a little bit more optimistic chart to show that Bitcoin's actually better than Fedwire. which does 6.8 transactions per second. But it still shows you that, 300 million transactions a year Bitcoin can do. 300 million payments. Nowhere near the fee level to worry about, which to me tells me we're not close to a top, nor are we coming down from a top, because it's just completely normal. And solid growth on throughput value. Here's the same number that I had on that Fedwire chart. As of August end, 8 trillion. Now, already, October, 8.4 trillion, trailing 12 months. I think that will be it for me, guys, unless you have anything else. Thank you for tuning in to me and not the Network State Conference live stream with 614,000 viewers. Although, feel free to join that at any time. Obviously, just thank you for joining. I like that. Yes, sir. Casa. Thank you, Daniel. Thank you, ETJ. Thank you, guys. Let me know. Any other questions? Tweet at me. Send me an email. I'm around. Have a great weekend. Wish you guys all the best. Thank you.